Well, thanks very much, Majura, and g'day everyone. Can I begin today by acknowledging we meet on the land of the Yagara and Turrbal people and pay my respects to their elders past, present and emerging, and thank them for their ongoing custodianship of the lands, winds and waters we all now share in Queensland. Can I acknowledge my good mate and ministerial colleague Sterling Hinchliffe, the Minister for Tourism, Innovation and Sport, and the Minister assisting the Premier on Olympics and Paralympics sport and engagement. Can I acknowledge the Shadow Treasurer, David Janetsky? Can I acknowledge Councillor Teresa Harding, the Mayor of Ipswich City Council? Can I acknowledge Councillor Kerry Hayes, the Mayor of one of our great coal mining communities, the Central Highlands Regional Council? Can I acknowledge all of today's sponsors, in particular Gert-Jan de Graaf, CEO of the principal sponsor, Brisbane Airport Corporation, all of the other distinguished guests, ladies and gentlemen. Well, g'day and welcome, and thank you for joining us today. It's clear from today's turnout that all eyes are on the Queensland economy, and I'm pleased about that. Can I thank the Queensland Media Club for prioritising our state's economy today and for inviting me to present the 2022-23 Queensland Budget Update. It's a big turnout because big questions need to be asked and answered. Big challenges lie ahead of us. Tough decisions have been made. But the results of those tough decisions has been an economic recovery plan that is delivering record results. Our economy continues to outperform. At the start of 2022, we were facing serious economic challenges. Not only Omicron, but a series of devastating floods and the global impacts of the war in Ukraine. As we approach the end of the calendar year, our record compares very favourably to other Australian states. Queensland's economy grew 4.4% in 2021-22. That is stronger growth than national GDP growth of 3.6% over the same period. Queensland's exceptional jobs growth has also continued. October's employment was 209,200 persons, or 8.2% higher than its pre-COVID level in March 2020. It's the strongest jobs growth of any jurisdiction over that period in both percentage and absolute terms. So Queensland is on solid footing. But there are risks on the horizon. Geopolitical instability is posing a very real threat to continued growth. The ripples of conflict in Europe are being felt across Queensland. The International Monetary Fund has downgraded its global economic growth forecasts. In its October World Economic Outlook, the IMF stated risks to the outlook remain unusually large and to the downside. On the home front, a tight labour market and the floods have limited domestic supply and have contributed to higher inflation. Inflation challenges are, of course, global. Central banks, including the RBA, are responding. They face a delicate balancing act, taming inflation without overshooting towards a recession. Whatever the future holds, though, Queensland is as well placed as anywhere to deal with future challenges. A strong economy has delivered significantly stronger revenues. Upward revisions have been made to total taxation revenue, totalling $1.7 billion over 4 years to 2025-26. In particular, strong labour market conditions are expected to deliver stronger payroll tax returns. As house prices ease, though, transfer duties are expected to moderate with a return to more normal levels of property transactions. Sustained higher coal prices, including unprecedented thermal coal prices, have driven royalty revenues significantly higher than had been forecast. Now, there's been some criticism of Queensland Treasury for not perfectly predicting this. As any Treasury official will tell you, forecasting is a complex task at the best of times, and Vladimir Putin has ensured these have not been the best of times. Our royalty revenue revisions of around $5.8 billion in 2022-23 reflect two things. Firstly, coal and gas prices being stronger than forecast at budget, and secondly, a weaker Australian dollar. On metallurgical coal, Treasury's price forecasts have proven largely accurate in US dollar terms. However, the Australian dollar was weaker, meaning the revenues to Queensland from coal sales occurring in US dollars was, of course, higher. The real surprise, however, has been the thermal coal market. For the first time on record, the premium thermal coal spot price has risen above metallurgical coal spot prices. This distortion has been caused by everything from flooding in the Hunter Valley, which has restricted supply, to European nations moving towards more thermal generation to reduce their reliance on Russian gas. The combined effect is that the price of thermal coal is up, and the effect is accentuated by the lower Australian dollar. So we intend to put those royalty gains to work, especially in regional Queensland. When we put the new progressive royalty tiers in place, we expected around $1.2 billion in additional revenue, which was allocated to new and improved hospitals in regional Queensland. Once again, we will allocate all the money generated by the new tiers to regional Queensland. We are reinvesting in our regions. Our new progressive royalty tiers will deliver an additional $2.95 billion this financial year. And today I can announce that we will set aside $3 billion in a long-term asset held in the Consolidated Fund dedicated to future infrastructure projects in regional Queensland. These new royalties that were earned in regional Queensland will not leave regional Queensland. Coal royalties are worth fighting for. Queenslanders deserve their fair share and they will receive it. The windfall profits made by coal companies are also a win for the people who own these mineral resources, the people of Queensland. That's what we did in last year's budget update when we set aside $2.5 billion as a long-term asset held by the Consolidated Fund. From our royalties, we will also invest an additional $1 billion into our government-owned corporations that own energy, water and transport assets. Another $100 million will go to the Queensland Critical Minerals Investment Fund, held by the Queensland Investment Corporation to support the next resources boom. $150 million will be provided for common user infrastructure to support critical minerals development. This will become increasingly important as Queensland looks for new opportunities to partner with the private sector, starting with vanadium, which is used for redox flow batteries. And we will renew the Resources Community Infrastructure Fund with an additional $120 million. The renewed fund will have a priority and a priority focus on coal-producing regions. It is Queensland regions that generate our mineral wealth, and they deserve to share in what that wealth delivers. That's why I'm pleased to announce today an allocation of $1.8 million to support Queensland's share of $3.6 million towards the replacement of the Phillips Creek Bridge on Saraji Road. Along with Commonwealth funding of $14.4 million and Council's existing commitments, this investment will ensure this project is now fully funded and can proceed. Now, I know that allocation doesn't sound like much in the context of the other numbers before you today, but I know this project means a lot, a great deal, to Councillor Ann Baker, who is the Mayor of the Isaac Regional Council. Most of you have probably never heard of Phillips Creek. Most of you have probably never driven over Phillips Creek. I did a few weeks ago when I was travelling from Moranbah to Blackwater. As the road dips down, you can see how easily it would be cut when there's a lot of rain. When that happens, it has a big impact on productivity of mines around Dysart, like BMA's Saraji mine. Through our progressive coal royalties, we will also make funding available for the Isaac Resource Excellence Hub. We're going to make that a top priority for this new fund, this renewed fund. And that will happen as soon as Mayor Baker and the other project partners bring forward the completed project assessment. The balance of the royalties uplift, around $500 million, will go to supporting other priorities and reducing debt. Severe weather events in Queensland can affect a lot more than just the Phillips Creek Bridge, so we must ensure our fiscal buffers continue to be strong. Queensland Treasury forecasts that the royalty gains we have seen this year will not continue at this level because coal prices will moderate. As you know, there's always some interest in Treasury forecasts for coal, and it's important to put this in context. Most forecasters expect that hard coking coal prices will decline significantly over the coming years to medium-term anchors that are much closer to the long-term average. It's worth noting that the Commonwealth Treasury has the adjustment occurring quicker and towards a lower price than Queensland Treasury. It's taken an appropriately conservative approach. That's what Queensland Treasury always does, and it's the right approach to its forecasts. Queensland Treasury assumes prices will normalise by mid-2023. On the screen, the thick maroon line shows our updated forecast for hard coking coal. Queensland Treasury's forecast, as you see, is realistic, with a higher forecast than Federal Treasury, as I mentioned. In fact, our price forecast is higher than Whitehaven Coal is using for its investment into the Winchester South metallurgical coal mine. When it comes to thermal coal, most forecasters expect that, given the international energy situation, prices will ease slightly but remain elevated for some time before adjusting to closer to the long-term average. Again, Treasury is positioned around the middle of the pack on thermal prices. Once again, Queensland Treasury's revised forecast is the maroon line you see on the screen. While some forecasters are higher, others, such as the Office of the Chief Economist in the Federal Department of Industry, Science and Resources and the Commonwealth Treasury, are lower. Westpac's forecast is also lower in the medium term. Now, if prices outperform that forecast, that is nothing at all to be ashamed of. It means mining companies are making more money, and the people of Queensland who own those resources are also making more money. A little over 20% to be precise. I've heard criticisms that Treasury's forecasts are too conservative. Of course, forecasts can go the other way as well. At the 2012 budget, the increased royalty rates introduced by the then Newman government were estimated to deliver a revenue uplift of $1.6 billion over 4 years. And these changes were expected to contribute to forecast total royalties of $11.8 billion over the next 4 years. However, prices fell sharply in the period following the 2012 budget. They remained at levels lower than forecast over the following years. As a result, total royalties paid by coal producers over that 4-year period were actually some 40% or $4.8 billion lower than the forecast at the time of the 2012 budget. But now, to return to the present. Since our June budget, a number of important government decisions have been announced. We are doubling the size of our housing investment fund to $2 billion. That means $130 million will be available each and every year to support an increased target of 5,600 social and affordable home commencements. We're also putting $400 million towards the delivery of our nation-leading Queensland Energy and Jobs Plan. And we're investing another $400 million to deliver more resources, more personnel and more equipment for the new Queensland Fire Department and Marine Rescue Queensland. We're delivering $86 million in 2022-23 to provide a $55 water bill discount for households in the South East. We can make these investments because of the strong economy our COVID-19 economic recovery plan has delivered. You may recall that the final $4.3 billion surplus for the 2021-22 financial year was the biggest on record. Well, for 2022-23, the surplus is going to be bigger again. A $5.2 billion surplus, driven by the revenue lines I described earlier. That means the deficit that was originally forecast for 2022-23 is now history. there's only one more deficit left in our forward estimates. Even though we've invested a lot of our increased revenue, we're also able to continue slashing our debt projection. Since 2020, every budget or financial update I have delivered has cut debt. As the Australian newspaper has reported, we have slashed net debt from $44.2 billion to $19.8 billion as at the end of 2022-23. That's an improvement of over $20 billion. And our net debt position has improved again today, as you can see on the screen. The economy has grown stronger and our revenue has grown stronger. That means debt continues to shrink relative to the size of our economy. Now, to put that in context, when COVID struck in 2020, Queensland and New South Wales were in roughly equal positions when it came to fiscal capacity. As I note, New South Wales, even with a proportionately higher debt, still has a AA+ credit rating like Queensland. We can see clearly how Queensland's COVID-19 economic recovery plan has delivered results. As our debt position has improved, New South Wales's has deteriorated. To put it in perspective, Queensland could borrow another $20 billion in the current financial year and achieve an equivalent debt position in per capita terms to New South Wales. That's important. Now, just to be clear, we have no intention of increasing borrowings to New South Wales levels. That's a sort of state of origin I like to win. But it's important to make the point. And the point is that we have a big buffer in place because there are significant challenges ahead. Energy prices, global inflation, the risk of global recession and bad weather. As difficult as the pandemic has been, the reality is that 2023 could be far more difficult, but in different ways. There's uncertainty on the horizon. But what we've done with royalties means Queensland is ready for whatever comes our way next. Queenslanders can be confident we have prepared our budget and our economic position to buffer our state from the wild winds of global unrest and of summer storms and cyclones. So thanks for joining me here today to hear firsthand the state of Queensland's economy mid-financial year. Majura, over to you. Look forward to taking some of your questions. Thanks so much.
Thanks, Treasurer.
Queensland Energy and Jobs Fund, so our $62 billion project. So that money will be allocated across time. We've already allocated some of it, as you know, to some of our GOCs, for some of those big batteries, some of those renewable energy projects. And we're going to do the same thing here. So we're going to set $3 billion aside from those increased royalties, all of it, and that's going to be allocated to regional projects. So that will be effectively water and energy projects in regional Queensland. A number of those are already on the books. I can see some heads nodding from some of the GOCs here today. They know the funding that is needed to come. So we will then allocate that over time, and we'll announce that as we make those allocations, Majura. But the critical point is this: those coal royalties were worth fighting for. Queenslanders deserve their fair share, and they're going to get it. We're going to deliver it to them. And we're going to deliver it to those regions that have generated that wealth for our state.
I anticipate that something else that you'll be asked about is the conversation that's happening nationally at the moment, which is the federal government's plan to cap gas prices and their request for the state to cap coal prices. From the discussions you've had, what concerns do you have about this proposal? How does it impact us, and how much compensation would you consider to be a fair deal?
Well, I think as you've heard the Premier talk about publicly, we don't want Queensland to be disadvantaged. We want to work with the federal government, but we don't want to be disadvantaged as a state. Everyone in this room knows the big energy powerhouse in this country is Queensland. And we are sending our electrons south regularly to keep the lights on and to keep industry going in New South Wales and Victoria in particular. We've extracted the gas, we've extracted the coal, and we use that to power our system here and to power the East Coast, which is the big part of our national economy. So the first point is the Premier will continue those discussions and those negotiations with the Prime Minister and other First Ministers. That's where the negotiations will occur. Secondly, we don't want Queensland to be disadvantaged. We understand the pressure that's on households and businesses, which is exactly why we've given more than $1.8 billion back to Queenslanders in asset dividends over the last few years, $175 this year alone, at a cost to the budget of $385 million. We don't complain about that. That's exactly what we can do because we own those assets. Because we own the power generators, the distribution, the supply system for electricity in this state, we can give that money back to Queenslanders. So we don't want to be disadvantaged as part of that bargain. So we'll strike a fair bargain. We'll advocate for Queensland as we should, as you would expect us to do. But we will work cooperatively in good faith with the federal government to get an outcome that they're looking for and something that protects our interests in Queensland as well. Now, I know the Federal Treasurer just yesterday has talked about a compensation, and I thank Jim for raising that. I work closely with Jim, as you know. We represent the same community in different parliaments, so he's put that on the table as something to work through. He wants it to be obviously a reasonable proposal. But I think that's a really good sign of good faith from the federal government. So we'll just have to work through that. That proposal will have to come from the federal government to the Premier, and then we'll look at that very carefully. So energy ministers tomorrow, who will examine issues, no doubt, and then National Cabinet on Friday to work through the final details, it would seem. But there's still a long time to go and an important couple of days coming up.
We'll now throw to the journalists on the working media table.
Majura, thank you, Treasurer. Mark Ludlow from the Financial Review. Just following up on Majura's question about obviously the government energy intervention plan, which the Prime Minister, even though he's got COVID now, is keen to bed down before the end of the year to try and take some pressure off household and company power bills. You know, the budget update quite clearly shows the Queensland is reaping a lot in coal royalties. You know, you're going to pocket $27 billion in royalties up to 25-26, which is $7 billion higher than predicted in the June budget. There's also, I guess that raise, and you also have got $5 billion in dividends from state-owned energy companies over the past 5 years. So I guess the fundamental question is, can't Queensland afford to have a coal price cap? And secondly, you're talking about compensation. Would it be a like-for-like, as in you basically wanted to get back from the Commonwealth what you're going to lose in terms of royalties?
Well, a couple of things there, Mark, and thanks for your question. A lot of our coal producers, the mining companies, aren't going to be party to this because it's really coal that is mined for the purposes of electricity generation. And I think 90% of the coal that we mine in Queensland is exported, it's sold overseas. So they're not going to be party to that, and it's not going to impact on them, I should say. You know, for the reasons you've heard today, we've made decisions about increasing royalties, a progressive bipartisan royalty program that everyone in the parliament supported. There was no opposition across any political party, including the crossbench, to that proposal. So we've made that decision to benefit Queensland and to support Queensland. But I think we need to have a look at the final proposal and the detail from the federal government before we can form a view about what that actually looks like when it comes to compensation or support for Queensland if we are to do something that impacts in a financial sense on our state. So the Premier's right in defending Queensland's position, but we are engaging positively and constructively with the federal government. We'll continue to do that. There's a lot of discussions happening, I know, and that will continue over the next couple of days to get what hopefully will be a mutually beneficial outcome for Queensland and other states, can I add. Other states have different interests and different perspectives on this as well, depending on their particular energy mix, their particular resource mix. So we need to work through those things cooperatively, and that's what we'll continue to do. But the Premier's made it clear we want Queensland's position to be protected, and that's what we'll continue to work through.
Someone else like to ask a question?
Hello, Marlena Watt from 7 News. Hi, Treasurer.
Hello, Melina.
The papers outline the risks to the outlook, noting that if there's prolonged unseasonable wet weather, that'll delay economic activity and contribute to more expensive things like fruit and veggies. You mentioned the water bill rebate. We had the $175 power bill rebate. Is there any scope, though, for extra rebates for people struggling to pay the bills?
Yes, we'll always keep that front of mind as we go forward, and we've done that consistently, not just the rebates we've provided to Queenslanders, but also the other cost of living measures we've implemented, our very large concessions program, so $6.8 billion in concessions back to Queenslanders this financial year. That's a 10% increase on the previous financial year. So we will always keep that top of mind when it comes to supporting Queenslanders. $1.815 billion since April 2018, $575 in electricity rebates alone. We've also kept our indexation rate very low. You know that inflation is running very high at the moment across the country. It's running high in Queensland, but we indexed our fees and charges this year, this financial year, at 2.5%. And when you see inflation, you know, above 7, approaching 8, to index our fees and charges at 2.5% means that we are trying to take the pressure off those Queensland families. But there are a range of cost of living pressures that are beyond our state's control. Interest rates going up again yesterday. So if you've got a $750,000 mortgage, you're paying $1,100 to $1,200 a month more. That's beyond our control, and that's something that is beyond our remit. But where we can, we will continue to do that. And that indexation rate has been very significant when you look at, for example, what some local governments are doing, increasing rates up to 8% in some communities across Queensland. So we've worked really hard. That comes at a cost to our budget, but we don't begrudge that. We do what we can within the parameters of what we can achieve as a state. And then, of course, investing in regional communities, investing in that hard economic infrastructure as well, to keep our people in employment, to give them a job so they can get on the path to a better job, and make sure their kids have a job too. So that's very important for me.
Hi, Rachel Rieger from the ABC. The budget papers outline that general government expenses for the next financial year are predicted to be $1.1 billion higher. Can you talk through what are the factors contributing to that and what the government is going to do to mitigate that moving forward?
Yeah, well, you know, we're growing the front line. We're employing more staff. You heard what I said about the the new Queensland Fire Department, our investment in emergency services, our investment in attacking domestic and family violence, so a very significant investment we just made recently, $225 million to support stage 2 of Margaret McMurdo's very significant landmark work. We've got money that's going to the police service, $100 million there, with more to come when further analysis is done of all of those recommendations. So we're continuing to make those investments to support Queenslanders, you know, that's part of the challenge I've got as the Treasurer. How do we balance our investment with our revenue? But you can see what's happening. We are continuing to build the front line, record investment in health in our last budget, The biggest health budget in history, the biggest uplift in the health budget in history, the biggest investment in health capital works in our history, and the biggest investment in mental health in our history. So these are all big numbers that are going to make a difference to Queenslanders, but we need a strong economy to deliver that. We need those revenue lines coming back, and we knew as a government that the wealth of our people was critically connected to the health of our people. So this is the dividend back to Queenslanders of all of the hard work during the pandemic, all of the work that the Queenslanders put in to protect themselves, their families, their communities, their businesses, so we could keep open and keep operating. And that's now the revenue that that's coming back to Queensland. And so I think that's a time for optimism for our state. I think we are the leading state in the Commonwealth now. We've shown the rest of the country what we can do and what we can achieve. And as we look forward, as Peter said earlier, and Mandura said, as we look forward to the Olympics, as we look forward to that 10-year horizon, 10 years in and 10 years out, we just see the buzz that's happening around the world with the Football World Cup. We are part of that now with a bigger event, the Olympics and Paralympic Games. So that's really exciting, I think, for Queensland, and we're now restoring those fiscal buffers to allow us to continue to manage that. If you have a look in the document as well, it talks about our fiscal principles and how we're managing within our fiscal principles, which is basically to control the growth of expenditure, to ensure it's less than the growth in revenue, and that's continuing in Queensland. At the same time, we're keeping the tax on Queenslanders lower. So we're delivering taxation for Queenslanders $654 a year less than the average of other jurisdictions around the country, and $1,114 less for everyone in this room than if you lived in New South Wales. So that's another little state of origin competition I've got going, at least in my own,
Just on Rachel's,
on my own desk.
Just on Rachel's question, just quickly, the budget documents note that expenses has gone up since the budget, $1.132 billion from memory, higher than expected, and one of those is because of additional health funding. That, I guess, isn't the argument then that there's, we're spending more on health than we expected to, regardless of a record budget in health? Isn't there an argument then that, considering that we're doing pretty all right, that we should be putting more money into the health system now, considering the state that it's in?
Well, fair go, Mandura just delivered the biggest health budget in history. Give me another 6 months, we'll see how we go. We will always fund healthcare in Queensland. That's the Labor story. We always do that, we always have done that, and we always will do that. So we'll always look to that. But what we are seeing around the country, I was just reading about the Children's Hospital in Victoria, all health systems continue to feel the ongoing consequence of COVID, and we know now in our state that we do have a large number of infections in the community. This terrible virus, as much as we want to leave it behind us, is now an embedded part of our community. It seems to be a respiratory illness that is not disappearing, as other respiratory illnesses have disappeared, and so that continues to impact on individuals. We've got people in public hospitals now taking up beds, quite properly because they're very ill. Now that number is decreasing over time because of the terrific way that Queenslanders have embraced vaccination, but we need to continue to support that. But some people will remain more vulnerable to the virus than others because of age, because of pre-existing health conditions, because of underlying health problems. So we need to be mindful of that. But we will always continue to fund that, and if additional funding is required, we will provide that. And having been the Health Minister for the first term of the Palaszczuk government, we need to continue to support our frontline workers, who are the heroes of our health system, heroes at both ends of the stethoscope, I used to say, the patients who sometimes live with very severe and chronic illness in a very courageous manner, and then all of our amazing nurses, doctors, health professionals in whatever capacity they work, supporting them as well as something critical to our mission as a government, our mission as a party. So we'll always fund them going forward. But we'll always keep an eye on that, Mandura. It's a good question.
Treasurer Tamavia 9 News. 13 years ago, Queensland lost its AAA credit rating under the Bligh government, which means it costs more to service our debt. how long do you think it will be before Queensland regains its AAA credit rating?
Well, thanks, Tim, but we're on the way. We're on the way is the short answer. Ultimately, we have demonstrated what can be achieved during a pandemic, which is we maintained our credit rating. We maintained AA+. When New South Wales and Victoria were downgraded, we maintained it in Queensland. And that was an incredible challenge, a challenge that Queenslanders rose up to take on, and our government was able to maintain that. So my priority is to deliver the services, the infrastructure and the jobs that Queenslanders need and deserve. We are a growing state, so we don't shy away from investing into infrastructure. We don't shy away from investing into health. We don't shy away from investing in economic infrastructure and social infrastructure. That's our priority. So we will continue to borrow as you would expect us to. We need to work our balance sheet, but our economy's recovering faster and better than almost anywhere else in the world, but we need to leverage that balance sheet to build the infrastructure a growing state needs. And as the budget update papers reveal, people are coming to Queensland, and we anticipate that will continue as the international borders continue to open and remain open, I should say. We're going to have more people coming to Queensland. On balance, that's a good thing for our economy, but we need to fund that. So we've got to find that balance to maintain our credit rating, which keeps borrowings manageable and keeps the cost of borrowing low, and then, of course, deliver the infrastructure, if necessary, by borrowing for our very large and decentralised state.
Good afternoon, Treasurer. Jacob from Channel 10.
G'day, Jacob.
Back to health. How do you navigate through the problem when record spending isn't enough, when hospitals are going over their budgets? Does the state government need more financial help from the federal government?
We would always welcome more financial help from the federal government, Jacob. I didn't ask Jacob to ask that question. But now that you have, we have challenges in our health system. Another issue that has been raised, earlier this week, which most people in the room will be aware of, is the challenge of what's happening in general practice, in primary health care. It's a broken system that we have in Australia, and we need to work hard to fix that. We need to do our bit as a state, but we've got to manage our healthcare system, what we do in our public hospitals in particular. But if we don't get primary healthcare right, then people come to our hospitals, they come to our healthcare clinics. That's not what they were originally designed for, but we will take that responsibility on. So this is a problem that is challenging governments around the country and around the world, so we're not unique there. But we have a positive and constructive relationship with the Federal Health Minister, Mark Butler, and we'll continue to work through those issues. First Ministers, to give you some confidence around that, or give the room confidence around that, First Ministers are looking at how we can improve healthcare in the country. Treasurers are looking at it. Health Ministers are looking at it through their various ministerial councils. And so we have all of the leading ministers in that space focused on what we can do to improve primary health care, to improve funding where we can. We accept the funding constraints on all levels of government, including the federal government, but we see some revenue lines coming back from the federal government, coming back to the federal government as well, as was reported earlier in the week. So hopefully over time we'll continue to work together and look to further funding from the federal government.
Afternoon, Treasurer. Matt Deneen from Brisbane Times. Just wanted to ask, given the situation that you've laid out with how the coal prices have played out and the, as you say, kind of a lack of pushback in Parliament for the new royalty tiers, do you regret at all not making them higher or lifting the existing tiers at all?
I didn't ask Matt to ask me that question, but no. Look. We made a call. We had an agreement with the resources industry for a 10-year freeze, the longest continual freeze in coal royalties in our state since the current regime started about 30 years ago. And acknowledge David Hamill, who's here today as well. He was Treasurer in that period. I'll try and count off all of those subsequent Treasurers later on. So we made a difficult decision, but the right decision for Queensland, to ensure that at a time of supernormal prices and supernormal profits, that a share of that should go back to our state. These resources, as I said in my speech, belong to the people of our state. They deserve a fair and reasonable share from that. And we're putting those resources to work for regional Queensland. They extract the wealth for us, and they deserve to get a return on that. So I think we got the balance right in the sense that they are progressive royalties, they are progressive tiers, and it's only when you get above a certain dollar figure that the higher tier is triggered. So if prices fall to where they have been historically, then there effectively will be no change to what companies have paid over that 10-year period. Now, we were pressed hard. We were pressed hard in the election to continue the freeze. We didn't agree to that. We made it very clear that we would continue with our promise, but at the 30th of June, the freeze would come to an end. And we made that commitment publicly. We made it to the people of our state during the election. And then we worked with the Resources Council, contrary to some of the comments that have been made. I met twice with Ian Macfarlane. I indicated that the freeze was over, that new tiers would be implemented. I made that clear. I made it clear to coal companies as well when I met with them. And we also discussed how abatement costs might be taken into account, whether an ongoing freeze would continue. We received nothing back when those things were raised. So we were open about it, and then we implemented it. And I'm pleased that it was supported across the parliament when it went through in the budget in June.
Thank you. Jack Mackay from the Courier-Mail. Just a change of pace, Treasurer, away from budget questions. You said earlier this year that you have no interest in ever becoming Premier. Why do you have zero interest in becoming Premier? And if not you, what about Stephen Miles? Do you think he would make a good Premier?
Well, we don't need an alternative because we've got the best Premier in the country. And the Premier's made it clear that she will continue in that role. But we have a strong team. We have a very strong deputy. If anything would happen to the Premier, then we have a deputy ready to stand up and take on that job. Well, I think you asked me the same question at budget time, Jack, and I said, well, I've got at least 6 more budgets to deliver. Another 2 this term, another 4 next term, and then, well, we've got to get to the Olympics as well. So, look, I'm very happy in what I do. This is an incredible privilege to be the Treasurer. It gives you an opportunity to see all aspects of government that you don't necessarily see as a line minister. So I'm really greatly honoured to be able to do things for Queensland in this role, whether it be a bridge that means something to a mayor in a great coal mining community, whether it's supporting the expansion of our public hospitals, whether it's getting a new hall for Woodridge State High School on their 50th anniversary in my own community. All of those things mean that I have just a wonderful opportunity to help Queenslanders, which is why I ran for public office in the first place. So looking after my community and looking after Queensland in my role as Treasurer is a really deep honour for me, and I'll continue in that role for as long as the government wishes me to serve in that capacity.
I might go back to a boring financial review type question, Treasurer. The Palaszczuk government makes a big song and dance about the rebates that it pays to households to help them with higher electricity bills. Wouldn't it just make sense to actually, the state government-owned generators, not to actually charge so much for electricity? It does seem like a bit of a merry-go-round. And a second part of that question is why, I'm going to be a bit of a devil's advocate here, why should other states have to pay compensation to Queensland because it's reaping so much money in dividends from the state-owned energy companies? Well,
to take the second question first, we're keeping the lights on in Sydney and Melbourne. It's all coming from us. We have to run our government-owned corporations as corporations. That's what the law provides in Queensland. And this financial year, we took no dividend, as I said at the budget. We took no dividend back to prop up or to support the bottom line in Queensland. All of that money went back, I think about $900 million off the top of my head, but it was hundreds of millions of dollars that went back into those GOCs so they could continue not only to operate effectively, but to start the work on the biggest single transformation of our energy system in history. If we're going to get to where we want to go by 2035, if we're going to reduce emissions from the energy sector in Queensland, the biggest single emitter in our state, if we're going to reduce that by 90% by 2035, then we need to reinvest in those businesses so they can continue to do that. And across the state, you can see that investment happening. New transmission systems, new batteries, a whole range of infrastructure to build the super grid that we're going to build in Queensland. Stuff that we've never done before in the state. So that's how we operate those GOCs. We either give it back to Queenslanders by reinvesting in the companies that then support those communities and support the business operations, or we give it back directly. So we always keep a close eye on that. But the thing about the government-owned energy sector in Queensland is that not only is it unique, it's something now special. It's our trump card. It's the trump card Queensland can play in this incredible transition that's going on. We are the envy of other jurisdictions. I'm not a treasurer that has to hear overnight that a private sector entity has switched off or intends to switch off a coal-fired power station in a shorter period of time, potentially destabilising that energy system and then having to run a rapid response to that. We can control this transition in a sensible, stable and secure fashion so we can lower energy prices over time, so we can ensure continuity of supply, so we can have a firm supply of electricity to householders and businesses, and we can do that in our state. We're seeing Victoria now mimic us, follow our lead by re-establishing the State Electricity Commission. And the other thing about those dividends is they come back to Queenslanders. If we had privatised those assets, if those assets had been privatised by the Newman government, then all of those dividends you've talked about, Mark, the $5 billion, they'd be finding a home somewhere around the world. That money would have left Queensland. Those dividends would have gone to shareholders in other parts of the world. So we use that money to reinvest in our businesses, to reinvest in regional communities. I was up at Boulder Combe, which is on the road from Mount Morgan to Rockhampton. I was looking at the investment that's happening there in energy on the way back from Mount Morgan, where we announced the re-establishment of the gold mining industry there. They're the policy decisions we make, and we're absolutely committed to them.
I think we've got a couple more questions in us.
Treasurer, just looking at the forward forecast, and we see that net debt and total debt is lower than expected this year, but the forecast looks like both are increasing in future years. How long will it take before Queensland is debt-free?
Well, I'll say this to you, Tim. Queensland never retires, Queensland never dies, Queensland always pays its debts. And so that's the reality. We issue bonds and we pay them off. Queensland lives forever. That's what happens, and we work forever. So it's not the same as having a household budget. We borrow to build, we borrow to invest in Queensland. We're a growing state. Some other states aren't growing, that's just the reality. States like Tasmania and South Australia have low population growth. We've got 1,500 people a week coming to Queensland. But as our Fiscal Principle 3 shows in the update document that will be released shortly, we are funding more of our infrastructure from operating cash surpluses. That's what good governments should do. We don't have to borrow it all. We need to use our cash surpluses to fund that infrastructure. We don't ask the current population of Queensland to meet those costs. We don't cut services to pay for infrastructure. We borrow in anticipation of our economy growing, and you can see we're beating the country. 4.4% economic growth last financial year, and those higher tax revenues allow us to service that debt. So our debt to revenue ratio continues to improve significantly. So between 2021 and 2022, the 2021-22 budget and 2022-23 budget, so in that financial year, the ratio of net debt to revenue improved by 24 percentage points in 22-23, and it's looking to improve to 17 percentage points in 2024-25. Now, that's when I handed down the budget. That ratio has improved again today with the budget update. So it's improved by a further 9 percentage points in 2022-23, so bringing the reduction in that ratio to 33% improvement relative to the budget I handed down to a little over 2 years ago, 2021-22. So about 18 months ago. So that's one of the key measures. How do you service your debt? And that debt to revenue ratio continues to improve for Queensland. So, we'll continue to borrow. We don't apologise for leveraging our balance sheet. Every business in this room, whether it be a government-owned corporation or a private sector corporation, they don't operate on the basis of being debt-free. They always look to borrow, to leverage their balance sheet, to reinvest. Why? To grow their business, to make sure they can buy new IT, new infrastructure, whatever they need to invest in their people, so they can grow their business. And we want to do the same thing, grow our economy over time. Our budget will continue to grow, our revenue will continue to grow, and we'll leverage out of that to deliver back to Queenslanders.
Quick supplementary, you gained $2.95 billion extra this year in coal royalties. How much change as Treasurer would you expect to have from that amount after redeveloping the Gabba?
Well, I'm sure that the discussions with the federal government at the moment around that, we've got a partnership deal with the federal government, and that money, of course, is going to regional Queensland too. So we'll deliver significant infrastructure for the Olympics, but we're negotiating that with the federal government. We've got a 50-50 funding agreement on that key infrastructure. That's very important for our state, and so we'll look to land that. We'll look to land that with the federal government, and then deliver the infrastructure that we need. But the other thing I think everyone in this room knows is 80% of those facilities are already built. Now, some of them will need a little bit of a refurb, but we did a lot of investment, obviously, during the Commonwealth Games, and we delivered the best Commonwealth Games ever, and we're looking forward to delivering the best Olympics ever with the best infrastructure ever. And that's what we look forward to. Oh, yeah, clap for the Olympics. And that's not just from Stirling.
We still have like a minute, so I'm just going to throw this one in. Prime Minister Anthony Albanese has basically said the 50-50 funding for the Olympics was never written down on any piece of paper. It was just the former Prime Minister saying stuff. What guarantee do you have, or what confidence do you have that the federal government, in its fiscal position at this stage, will stump up the money?
Well, you're right, Majura. Scott Morrison said a lot of stuff. That's absolutely true. Now, we have an agreement with the Commonwealth Government. That was an agreement not just from Scott Morrison, it was an agreement with the federal government. The Commonwealth agreed, was part of our bid process. We wanted an agreement with the federal government, the national government, to fund 50% of infrastructure. And the bid proceeded on that basis. And we anticipate the current federal government committing to that, holding up their end of the bargain, because it only makes sense for a national government to support this enterprise. I don't think anyone thinks it's reasonable for a sub-national government to fully take on funding, not just the biggest sporting event in the world, but the biggest event in the world. So that partnership is very important, and we anticipate that to be honoured in full.
Wonderful. I think that wraps up our Q&A session for the day. Thank you, Treasurer. I'd love to keep you up here for half an hour more, but I won't.
Thanks, everybody. Thank you.
So, that brings us to the conclusion of the lunch today. Please join me in thanking the Treasurer, Cameron Dick, once again.